Assalamu alaikum. Welcome to question 27 of ATX revision kit. This question is from your section B of ATX. So all this while I have been doing questions from section A, which is for 50 marks. Now we are moving on to section B, which is for 25 marks. So and this question 27 is from your employment section. If you pick up your Kaplan revision kit, you will see that question 27 is from your employment section. Okay, section B questions are easier compared to section A because section B focuses on one relevant area and the questions related are based on that topic. For example, this is employment. But section A has multi-tax aspect like inheritance, capital, income tax, VAT, everything will be asked in section A. But section B does not have exhibits like how we have in section A. That's a good thing. It's not lengthier like section A because marks are less, so less information to read. That means you can quickly do it. But you have professional skill marks here also, and it is reduced from 10 to 5. Professional skill marks in your section B questions are for 5 marks. Communication skill will not be tested in section B. Reason, you don't have to write your answer in any format like you had to do in for 50 marks question where you have to write a report or a memo or notes, things like that. In section B it's easier. You get a question and then you start writing the answer. So this is about Yacon and Daikon. Now, first we'll read the requirements. Requirements are obviously lesser here. So there are 3 requirements. First one, explain whether CSOP and SIP satisfy Yacon's criteria for a tax advantage share incentive scheme. So this is your first part, and this is the second requirement. Income tax implications for employees of acquiring the shares in each case. That means both the case. What are the income tax implications? Remember, they are already asked you income tax implications. Do not give capital gain tax implications or such things like that. Worth 8 marks. Next, so you can divide this 8 marks equally among the two. First part where you have to explain is for 4 marks and income tax implications 4 marks. B, calculate with brief explanation. So you have to give calculation also and explanation also. If you just give explanation, you will not get the entire marks. If you just give calculation, you will not get the entire marks. Both needs to be there. Regarding PRR, private residence relief and letting relief. So there are 2 reliefs which are available to reduce the chargeable gain on Daikon's sale of his house. 7 marks. Next, inheritance tax. So explain the inheritance tax implications of Jacama's gift of apartment to Daikon on 5th June 2022 if Jacama were to die in December 2027, worth 5 marks. And you have the 5 professional skill marks. What are they? Analysis and evaluation and commercial acumen. So now let us read. So now if you see here, you only need the Yacon's part for your requirement A, Daikon you need for requirement B, and gift of apartment by Jicama for requirement C. And it is in order. So now we have to assume today is 1st December 2024. Now, so these are the basic summary requirements. We have already covered the requirements. Now we'll go. He's a UK resident, unquoted trading company which is not a part of a group. Considering setting up both this and this. Now we'll read. So employees will be selected to join the scheme dependent on their period of employment with the company. If the scheme is this, employees are offered up to 3,000 per year. And employees will exercise the options 5 years after being granted. If it is SIP, they'll be given free shares worth 3,000 each year. Employees will remove the share from the plan after 5 years. You already know this, so you have to explain both SIP and this. Now, so now there are three areas where you can explain. Basically, you have to explain the differences and similarities between the two options. First, we'll explain CSOP and then SIP. So under this, ability to select employees. Under this also, SIP, ability to select employees. So here, under this, see, that's why you have to know the knowledge of this scheme very well. Okay, under this, the company will select employee as they wish. And this one, all employees must be offered the opportunity to participate in this plan. Okay, now value of options granted. And what is the value of the option granted? So this is value of the free shares given. Here you are giving options, here you are giving free shares. So here Yacon can choose to award options to purchase a different number of shares to each member. There is no annual maximum amount, but there is a limit up to 30,000. This limit you have to remember. Up to 30,000 worth of options the employee can be granted. But if you see in this question, it is up to only 3,000. So 3,000 per year for each employee. This is within the limit, within the 30,000 limit. Next here, free shares. Free shares you can give up to 3,000 per each tax year. And in this one, it is 3,000. So this is also acceptable because it is within the limit. And when you are giving this free shares, it has to be on a similar terms to all employees. Now, the last one. What is the holding period and tax implications? So the holding period. So in this case, as CSOP, there are no tax implications when you are granting the option or when they are exercising after 5 years. Why? Because if you remember the rule of this exercise is between 3 and 10 years of being granted. That's why no tax implication. And when you come to SIP, there are no tax implications as well when you are putting the free shares. So as free shares are there in the plan for 5 years, there will be no income tax liability when you're withdrawing it from the plan because you're holding it for 5 years. If you're withdrawing it before 5 years, there will be tax implications on employees. Now, part B. So you have to explain the PRR relief and letting relief. You have to do some calculations and you have to explain. So this is easy, one of the easiest to score marks, and students often perform well when it comes to this reliefs, especially the PRR relief. So you have to write the exam years. You can even write months. In this, it's given years and the chargeable years. So now we have to go to the second part of this. So this is about an apartment which was given by his aunt on 5th June 2022. He has never lived in this apartment. Now he will sell the house he currently lives in and move on to his apartment on 31st December 2024. Sale of his current house. So Daikon is going to sell his current house. Okay. This year he purchased it on 1st July 2016 when he was employed overseas. That means he did not occupy this from 1st July 2016. From 1st July 2016 to 4th June 2022, he did not own any other property. Now he is going to sell this on 31st December 2024, giving rise to chargeable gain of 145 before any reliefs. So now occupation, you need this information to calculate your PRR and letting relief. He has moved into house on 1st Jan 2017. So he occupied it on 1st of Jan 2017. And then since then he was being there in the house except from 1st July 2018 to 31st December 2019 Again he was employed overseas. Then he resumed the occupation on 1st Jan 2020. Remember, the last 9 months will always be exempted, whether they occupy or not. And some of it might come under deemed occupation. Now, since 1st April 2020, this is the last. See, they are following a sequence, chronological order. You have to follow this chronological order when you're calculating the reliefs. 1st April 20, they are letting it out. See, you can only get the letting relief when you are actually it's your PRR, and only that you are letting it out. It should not be a commercial property or anything. This is a residential property where you are also living, and you are letting it out. So you are letting 25% of the property, and 75% you are retaining for yourself. So now we are going to calculate the dates. You can take it in terms of months and years. Normally we take in terms of months. That is also acceptable because anyway you are going to get the same PRR at the end. So now this is the date when you have purchased it till 31st December 2016, because you have started occupying it from 1st Jan 2017. So this is you are absent. Before that you did not occupy. Because you are absent, it will be chargeable. From 1st of July 2016 to 31st December 2016, just for 6 months. So 6 months, if you take 0.5 years, in terms of years it will be 0.5 years. Then from 1st Jan 2017 to 30th June, 1.5 year. So it's 1.5. Then again you are absent because you are employed overseas. See, when you are employed overseas up to 3 years, you will be exempted. So if you take from 1st July to 2018 to 31st December 2019, it's still 1.5. The whole thing will be exempted. Then again you occupied from 1st Jan 20 to 31st March 2020. Just 3 months. So if you take 3 months, it is 0.25 exempt. Then you have occupied again from this date to this date, but when you occupied it, you have let it out also. You have only retained 75%. This is exactly 4 years from 20 to 24, but only 75% you have retained. So 75%, which is 3. 75% of 4 is 3. So 3 will be exempted. 1 that you are letting it out will be chargeable. And the last 9 months, this is the date when you are selling it, 31st December 2024. Go 9 months back. So it starts from 1st April 2024. This 9 months are always treated as 100% occupation. It's always exempted. Unconditional. So 9 months is equal to 0.75 if you take it in terms of decimal. So this is exempted. So now when you are taking, your chargeable gain was 145,000 without any relief. So you take whatever is exempt. Exempt is 7 out of the total 8.5, 7 and 1.5. So this is your PRR. Now we'll go to the letting relief. Letting relief is the lower of this 3. You have to explain, that's why you have to write it out. Just giving number and writing letting relief is this much is not enough. If you don't explain this portion, you're not going to get the full marks. So you have to say that this relief is available when a part of the individual's private residence is let out. So that portion that you are letting it out will not qualify for this relief but another relief. And this property must be occupied by both the tenant and the owner during that letting period. So now it will be the lowest of 40,000. The gain which is exempt under PRR exemption, just now we have calculated it, 119412. And the gain attributable to the letting, how much? This was the chargeable gain and you have let it out only 1. Only this 1, not 1.5. 1 over the total. So this much. So the lowest is this much, the letting relief. So the letting relief is this. Now we are moving on to the, so you have to write subheadings like this. It's important. even if you're not following a format. So inheritance tax implication. So you can go back, you have to explain the implications when you're gifting it. On this, assuming he's going to die on December 2027. So if you see the date, it is between 5 to 6 years. Okay, so it's less than 7 years. That means tapper relief will be available, but they will be exempted. They will be chargeable to inheritance tax. So the last portion I need to read. This will be given on this date, and he's going to continue to live in this property for the foreseeable future. This was on a condition. And on this date, 12 March 2024, Jicama now starts living with her sister. She removed the condition that she had previously imposed on the gift from the date. Many of you have failed to recall that this is gift with reservation and it has been lifted on a later date. It is this section that they are asking you. This is usually not asked, but when it is asked, make sure that you know the rules. So it's here. So remember, when you are gifting it on this date, it is a pet and it will be at market value. And this gift is a gift with the reservation of benefit. Why? Because they're still living in that property even after gifting it. Jicama had imposed a condition, but this reservation of benefit was lifted on this date because Jicama is now living with her sister. So now this created a further pet. There are two pets now. First, initial pet when they have gifted the house. Second, when they have lifted the reservation, again it's a further pet. And if Jicama dies on this date, so there are three areas you have to find out. First, on 5th June 2022, then on 12th March 2024, and then on December when he dies, what happens? You have to divide this into three paragraphs like this. So if Jicama dies on this date, if you see this is within 7 years of the date of original gift, you have to check from the date of original gift. That is from 5th June 2022. So if you see, both the original pet and the later deemed pet becomes chargeable now. And tapper relief also will be available here, so that your inheritance tax reduces in both cases. To avoid a double tax charge, see, it is on the same pet, same benefit, same gift. There are two times pet, right? So when inheritance tax is charged, there will be a double tax. So in order to avoid this double tax charge, your pet, only the pet which charges a higher tax charge will be chargeable. That means in your inheritance tax calculation, only the pet which gives you a higher value will be chargeable. That means it could be your original pet or the deemed. You have to compare the two and see whichever is higher will be taken to inheritance tax, not both, even though both becomes chargeable. So that's it for this. You can go and read the marking scheme. You can go and read the examiner's report on this. So now we'll be moving on to the next question. That also will be on section B, which is for 25 marks.